All right, let's see what we get here. Let's switch over to our all markets view just so we can keep an eye on this. Okay, so initial move higher here for the dollar is lower. Stocks are higher off of this initially. Bitcoin is making a push higher. Gold and silver also moving higher here. You have a pretty good move higher in stocks, at least the initial bump here. S&P 500 up 0.4%, NASDAQ up 0.5%, although Wix forming on the top. Let's see what the number actually came in as. Let's see, what do we get? Okay, so 2.6%. So inflation came in softer than expected, guys. 2.6%. So we were expecting a year over year figure for the producer price index number to come in at 3.3%. 2.6% is a cooler than expected print. That is a good thing for rate cuts, right? So rate cuts are now very much on the table, as if they already weren't, right? We already knew we were going to get rate cuts in 9 days from now or whatever it is, but this all but locked it in for certain. That telling you that inflation is not necessarily out of control, at least from the producer price index. Tomorrow we get the consumer price index number. Do not sleep on the importance of the consumer price index number. We can't draw from this, certainly we are going to have a low CPI print, but this is a very welcomed figure. You see Bitcoin making a push higher here, gold and silver also pushing higher here. Let's take a look at gold. Again, remember what I just discussed. Most scenarios continue to favor gold bullishness. If it's a tough environment to be a gold bear, because what do you want? You want inflation to go high or low, right? If you want inflation to go high, all right, stagflation risk. You want inflation to go low? Well, that just means rate cuts. That's arguably even more bullish for gold. So to me, what you have here on the table is a scenario where there's just a melt up happening in gold. It is very, very difficult to time the top of these kinds of moves, and I would argue it's kind of like a fool's errand to even try. Like the better strategy, in my personal opinion, is this is going to be obviously hindsight, but to have already been long before this kind of move, or to wait for pullbacks if you're not in it, right? The system here has been telling us US data has been coming in really soft. Jobs data has been really weak. It's been in a downtrend, secular downtrend, actually for a lot longer than we thought, with those huge downward revisions in the jobs data. I mean, the last year and a half, we've probably just been in a slow deteriorating jobs market, and things now start to be speeding up to the downside. So probabilities for a Fed rate cut, probably going up higher here today, which is arguably why silver and gold retaking their momentum to the upside. Bitcoin, I have a short position on this one, probably going to get stopped out here today. I'll show you my P&L on this one. IBIT down $968. This is probably going to be $1,000 loss for me, which is what it is. It is part of trading. You're not going to get them all right. Again, if this thing breaks through these highs, very likely that I'm going to go ahead and take a quick loss on this one. I'm also long SLV, which is the silver ETF. This one is going really well though. So doing just fine on the silver side of things. I've trailed my stop loss further in to profit. I'm looking for an opportunity to do so again. If we can take out these highs, I'm going to trail that stop further into profit here, just lock in a little bit more on the trade. But looking good on silver, looking not so great on Bitcoin, and we'll take a loss if need be. Let's take a look at yields. So yields are lower here today, right? So this is, again, increasing probabilities that you are going to see the Fed rate cut in September. There is also a very modest potential for a 50 basis point cut or a 0.5% rate cut. Now, most Americans would love this. They would welcome the Fed to lower borrowing rates, especially people who have loans, people who want to purchase homes. They want mortgage rates to come down, right? Things like that. I think it's very welcomed by a lot of people. My opinion on the matter is I think the Fed should cut 0.5%, but I think the Fed will probably actually only cut 0.25%. Why do I think the Fed should cut rates? Well, because I think the labor market is in trouble if you don't start moving fast. Now, I think part of the reason they won't cut interest rates by 50 basis points or 0.5%, I think the reason they might not do that is because they might realize that that could signal exactly what I just said. It might signal to the market, hey, we're in trouble and we're cutting rates quickly because we might be behind this thing. right? So I think they won't do that simply because of how it might look. I hope that makes sense. But there are, human emotions tied to these things to some capacity. And so I don't think the Fed will cut rates by 50 basis points or 0.5%. But I do think there is an argument to be made that they should. That's personally where I'm at with it.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
VIX is moving lower here. Dollar index moving a little bit lower here in response to this. Take a look at your 15-minute chart. Price moving lower on dollar. Gold initially spiked, actually losing some of that momentum here. Same with the stock market. You did get an initial pop. Let's see how these candles close. Arguably, this is a nice upward catalyst for stocks, right? Remember that cooling inflation suggests, okay, Fed has room to cut rates, right? Nick, can we say that PPI has a direct proportion effect on the CPI numbers? If yes, can we also say that we will get a surprise in the CPI numbers too? Sparks, that's a great question, and the answer is kind of, right? A lot of the same factors that are going to impact the producer price index are also going to be into the consumer price index, right? So the thing is, the market's smart. They already figured that out too, right? The second this number came out, the market moved saying, oh, well, CPI is probably going to also be a little bit cooler, right? It's not a guarantee and it's not 100% because you could have certain variables within the consumer price index that might have spiked higher, right? But the probabilities for a lower than expected CPI print already are being priced into the market. That is why the market is hard to beat. It's very smart. It's figuring this stuff out. So your analysis is correct. It's just that the market is also thinking that too. That's why the market is making that push. Again, S&P 500 here near session highs. NASDAQ breaking all-time highs here as we speak. Really impressive push for the stock market in response to this dollar index. A little bit soft here at resistance. Keep an eye on gold. Let's see how it reacts here. I think that in terms of the price action here, you want to see momentum just continue. And what I mean by that is that you have this trajectory. You want to see this trajectory continue if you're a bull. If you're a bear, obviously you don't want that to continue. You want to see signs of reversal. But what I mean by momentum needs to continue is that when you have these kinds of moves, right, you want to see them not hesitate to keep pushing, because everybody knows, okay, gold's a little overbought here, right? Doesn't mean it has to reverse. It could keep going, but you want it, if you're a bull, you want it to stay kind of pushing the envelope. You don't want to see it start stalling, because a lot of times overbought plus stalling, that's where you actually can start to get that momentum rollover. So we'll see, but we will be monitoring gold and silver prices. Again, silver a little bit soft following that. Gold, same thing, a little bit of a muted response to the inflationary data. Again, cooler than expected. This helps the story in terms of rate cuts. Stocks like this because, again, it means more probabilities, more of a case for reducing borrowing costs, which is arguably an injection of stimulus or liquidity essentially into the stock market. Long story short, you cut borrowing rates for everybody. It finds a way to funnel right back into the big stocks within the corporate America, right? Because that's where people spend all their money. Eventually, it funnels into the big names. We also have Dow Jones pushing through those highs, or at least trying to make a push through the highs. But keep an eye on this, guys, because again, is this enough? Is this enough to really keep the market pushing? I think you have to be careful, because you could very arguably see this pop here today stay muted as we continue to await arguably the bigger component, which is the consumer price index, which comes tomorrow morning, right? So you're getting a little bit of a pop initially. I would not be surprised if we just sort of stabilize where we are. And, I would be a little bit more surprised if you saw this thing just drive through the whole day. Could happen though. Crazier things have certainly happened. So we'll keep an eye on the indices here. Taking a look quickly at currencies, euro dollar, pretty unchanged. Pound dollar sitting there at resistance. Let's see if we can get a break through those highs. The Australian dollar, also nice decisive push here. Watch how this candle closes today, because if you get something like this, if you get a candle closure here, pullbacks into support, could potentially be a continuation trade or setup. We'll see how that settles here today. Let's see. Going back quickly here just to check in on the indices. Take a look at your 15-minute charts. Again, push up, a little bit of selling in response to this. I, again, would not be surprised at all if you see this kind of move. Just sort of stay muted. Doesn't necessarily mean the market turns super bearish, just that, again, you're still waiting on the consumer price index tomorrow, which can potentially nullify what you get in producer price index. Sometimes you see these things reverse each other, where one is hot, one is cold. Most of the time, though, data sort of tends to fall together.
Okay, let's come back here. It takes a lot to break daily trend, right? Let's say we get a structure break here. You can see this pound yen, I just picked any currency pair, right, was in an uptrend, I would say till here. So from the 23rd of April to the 1st of August, we were in an uptrend. So that trend is very reliable, right? If you look on the 15-minute chart, the trend is very unreliable, right? You're going to have a trend break within hours, right? So there's more consistency and reliability in trading higher timeframes. Also, you know, if you have a 15-minute support zone, that's going to get broke like that. Whereas if you have a daily level, price will constantly respect it. I mean, just look at this daily resistance level here, right? It keeps being respected. And it's been respected from here, which is the 9th of July, up until the 8th of September, right? There's no 15-minute resistance level that's going to be respected that much. So, yes, that is why I trade the higher time frames also. You know, typically, guys, I'm looking at weekly and daily. Sorry, guys, I'm just finding your questions. I'm looking at weekly and daily for direction, and then I'm entering on the H4. Right? So, yeah, I just wanted to chirp in with my couple of pence on that matter. Also, guys, let me show you a trade that I've literally just got into. Yeah, these are not, you know, trades after the fact. This is a live trade that I've just got into right now, and it's a pound yen sell trade. So let's start by understanding this, and then I'll take as many of your questions as possible, guys, all right, in the time that I have. And I hope you're all having a lovely trading week. So this weekly resistance level, right, keeps holding. It is good resistance, okay? And then if we look at the weekly candle, you can see we had a big rejection wick at this level, and it's not the first time we've had rejection at this level, okay? It's a good level to sell from. Now, if we drop down to the daily chart, you can see, guys, that price has come back up, and we find ourselves in, you know, kind of a bit of a range, right? This level didn't break. All of these wicks keep closing back inside it, right? So we're kind of between here and here. So bearing in mind that that is a very strong weekly level, and we're starting to see selling. Well, actually, guys, I'll explain more on the H4. We are starting to see selling candles, but these are not exactly super bearish, right? Let's be honest. But the final piece of the jigsaw, right, was the H4, okay? So if we drop down to the H4 now, you can see the trade I just entered there. Basically, once we got up to this level, we've tested it, but we're still in a H4 uptrend, still in a H4 uptrend, still in a H4 uptrend, but finally we get a break of structure, right? So we're starting to get lower highs, potentially here, and we're starting to get lower lows. So not only have we hit a key resistance level, we've also started to have H4 structure breakdown as well. And I basically entered here, guys, right? I started to see these top wicks appear, close back within one another. I started selling here, stop loss above here, and this will be my first target. So typically, once I get 1:1, I am going to take some profit off the trade, right? I'll take anywhere from like 50% up to 90%. And then I'll let some profit run, potentially, right, all the way back down to this area here. So there you go, guys. That is a live trade I have just gotten into pound-yen sells. And it also come off the back of that terrible PPI data, right? So if I'm in a yen trade, I always take a look at the indices, right? Because yen is a flight to safety. And, you know, that PPI data that just come out, you know, is it going to have a negative impact on the indices? We shall see. So far, not overly, right? But I will keep an eye on the indices when I am trading yen. So there you go, guys. I just wanted to share the trade that I am in. Let's take a look at a few questions now. So we've got a few people wanting to look at oil. We've got oil, gold, Nasdaq. Let's go through all of them, right? Let's look at oil. This is actually a trade idea for me today if we break this level. Right? So let me explain how I get to this level. Right? Again, I do a top-down approach. So I actually start with the daily. Right? And as you can see, daily was in an uptrend, but then bang, we broke. We're now in a downtrend, right? We broke these lows. We're getting lower lows. Okay, we're now in a downtrend. And you can see, I love this setup, guys. This happens time and time and time again. But what was once support, right? When it breaks and retests it, it becomes very good resistance, right? And you can see the wick rejections we're getting at that level, all right? So daily tells me I can sell. And all I would look to do is take it back down to these lows, right? First of all. And then basically, if I get a qualified trade on the daily for the reasons I just explained, I'll take a look at the weekly, right? And I'll be looking at the weekly to see if it, just basically to see if it doesn't contradict my idea, right? So as you can see, we were in a weekly uptrend, and now we are in a weekly downtrend. We're getting lower highs, right? Lower lows. And also, guys, right? Again, what was once support becomes good resistance. My God, if you only traded one setup for the rest of your trading career, it should be that, right? When support breaks, it becomes very good resistance, and vice versa. Resistance breaks, it becomes very good support. Trade that setup. It's a wonderful bloody setup, right? But not only that, we've had a very large bearish weekly candle. So weekly and daily, right, at the start of the day, tell me I can sell oil. This is West Texan, spot crude, but you know, it's the same for Brent, really, guys, right? So I just put this on my little sheet. I put it on my channel. I'll give you these trades every day, right? So sell trade. So it's one thing knowing direction, it's another thing finding an entry. Okay, and again, I'm going to show you exactly what I do. So my entry time frame is typically the H4, right? And as you can see, right, we are in a H4 downtrend, but price has come up and we've started to see these higher lows, right? Which doesn't fill me with confidence for selling. So all I'm looking for is a break of this low. Hence my alarm is in here. Once we get that, or if we get that, if we get something that looks like this and we break that level, right, I will be looking to sell. Okay, stops above here, look to take price back down to these lows. So oil is a sell trade for me, but I want to see lower time frame structure break down. There's no better indicator than structure breaks, right? So it'll be really interesting to see what price with oil does at this level. If it starts breaking it, well, I'm not interested. I'm no longer interested in selling this. But if this level holds and we get a breakdown in structure, I'm very much interested. So lots of things have to happen for me. Not lots of things, it's just simple price action. But I want to see these things happen for me to take a trade, because if these things happen, there's lots of confluence in that trade, right? And that increases the probability. So oil, I am looking to sell.
So CAD Swiss, I think CAD Swiss is a beautiful pick right now. So I put out a YouTube video last week, basically just going over what's going on with the Canadian dollar or the Canadian economy. It's in a bit of a rough patch. I'm not going to go into the whole thing. As I said, I've already spoken about it, made content on it, but the current account deficit is pretty tragic right now. Their unemployment is rising very gradually, but it's showing no signs of slowing down. Bank of Canada is dovish. So overall, Canadian dollar, easy peasy shorting opportunities, in my personal opinion, not financial advice. So I'm just waiting for opportunities to get in. So with CAD Swiss, we have broken this level of support that's been in place since July 2025, so only a few months ago. Finally broke, and it seems like on a fundamental view, we very easily could come down to this low at 0.54 that was established. Actually, hold on, I'll go to the daily time frame. Here, that was established all the way back in 2015, this low right here. So I'm being a little bit, depends how you see it, pessimistic, optimistic that we could get there, but it doesn't matter until I can get into the trade. So I'm looking for a retest of this support. I'm looking for this 50% level to get hit. So obviously if we draw the fib from high to low, this support level is 50% on the fib perfectly. So it's like a French kiss or a chef's kiss or whatever you call it. No, French kiss, I think that's the wrong one. The Aussie CAD, again, you'll see a theme throughout my trading today. The Canadian dollar is on my, or in my sniper scopes. I'm not in anything from the Canadian dollar yet. I'll show you some open positions soon. But Aussie CAD, the Australian dollar, sorry, not the Australian dollar, the RBA, so the Central Bank for Australia, are currently quite hawkish, actually. Obviously, we've got the Canadian, Bank of Canada, currently dovish. So overall, we've got a really, really nice central bank divergence there. Euro dollar, I don't like euro dollar right now. I've got no opinion. I think we could see higher prices, but I think it's going to be a grind. And I just don't see huge opportunities right now. I think 1.2 is definitely still a longer term target or a medium term target. But yeah, in terms of actually taking the trade, I don't really have much interest, but I like to keep an eye on it. Dollar Swiss should be a no-brainer for quite a few of you. Investing with Ian, hello. Can you also look at Pound CAD? Yeah, Pound CAD's also in the sniper scopes. Flex Baylor, hello, good to see you. So the Dollar Swiss, you'll notice Canadian dollar and the US dollar are in the scopes for shorts. Pretty much everything else is either neutral or bullish in my case or in my view. So I'm looking for fresh lows or recent fresh lows on the Dollar Swiss. I'm just waiting for some sort of confirmation to get in. We do have this really, really nice downtrend or channel, whatever you want to call it. We did break it, and it seems like we tried to break back in, failed, showing that we do have some sellers back in control. So yeah, I'm just waiting. I don't want to be too hasty with Dollar Swiss just yet. CAD Yen, again, same thing with the Canadian dollar. We've already mentioned this. And then we've obviously got the Bank of Japan that might be hiking rates. It seems like they're quite cautious, but that possibility is there. So I think CAD Yen is definitely on the table for potential shorts. Swiss Yen, nothing here right now. Similar to euro dollar, I'm more just watching it. It's not something that I'm really interested in placing any positions on just yet. Dollar yen could be a perfect one. I'll leave this one to you to figure out why I've mentioned individual, the dollar and the yen, so you should be able to get that one. And the requested pound CAD. So pound CAD, I think, is again easy short CAD, pretty simple long on the pound. I don't like the pound. I think that there are massive problems within the UK. However, they're not reflected in the markets, at least yet. We do have some stagflation concerns. It seems like the Bank of England's pretty neutral. I mean, slightly dovish, but not to the extent of the Bank of Canada. So I was already looking at this one. So I do have targets pretty much just coming into this recent high and then slightly beyond at round numbers. Nothing overly complex, but in terms of actually getting in, there is nothing here until we see some sort of pullback. So for me to take this trade, I cannot really justify getting in if something like this happens, just because the R&R and that's not really worth it in my view. And that's just my personal trading. So the only way I could really take this is if we see a correction of this left side H4 candle, see price pull in, oops, sorry, I got the magnet on there. See price pull into the 200 moving average or something like this, and that would be a double whammy to then potentially take a long position. Again, I keep my trading very, very simple on a technical side. Silver, saw someone in the chat requesting silver. I would love to be a buyer of silver, but I just can't find an entry. I've been waiting for silver for a long time, and I'm actually very, very salty. So I was in silver longs back at the start of the year, actually. I can't remember exactly where it was. It was fairly sure I was in longs here. So I was buying this rally to the upside at the time. Then we saw this and I was like, oh my God, I was pretty highly leveraged in the position. I'll be honest, it was a big one, but obviously relative to the account size. So I was like, I can't justify the open risk that I have on this. So I had to cut the trades, and it was a bit of a sting, nothing too major. And then we saw this and I was just so upset, not upset, like, upset. It's just one of those things in trading, when you get bitten in the markets, it can be a bit of a stinging bite. So that's that. But yeah, in terms of targets, I've been targeting 44. Sorry, no, I was wrong. I was targeting 40 pretty much all year. We finally reached 40. So now the next targets you can see here, UBS for the second quarter of 2025. Oh, sorry, misspeaking. The fourth quarter of 2025 is at $42. Seems like we're going to get there within the next 1 to 2 weeks. I would say maybe this week. And then we do have the second quarter of 2026 targets again by UBS at 44. See the economic heat maps. The economic surprise meter. US dollar's gone down to 20. Big drop. The US dollar was not that bad. I think it was 45 roughly a couple of days ago. Now it's dropped all the way down to 20. Very, very sad for the dollar bulls. Pound 86%. Yeah, I mean, it's exactly what I said earlier about the US dollar and the CAD being very clearly short ideas here. I mean, the Edge Finder's saying it very clearly as well, with the dollar having 20% and the CAD having 25%. Everything else is relatively neutral. Swiss not doing great at 17% actually as well. Although I don't really like to trade the Swiss. I'll stay away from the Swiss as much as possible just because of its safe haven appeal. Is something that I would really rather stay away from. It's a very stable currency, generally speaking.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.